So, have you ever wondered what actually happens behind the screen when a bank approves a loan in, like, minutes?
Right, or when a government agency processes some incredibly complex request without just completely drowning in paperwork.
Yeah, exactly. I mean, it feels like magic sometimes, but it isn't. It's enterprise automation.
Yeah, the unseen plumbing of the world.
Right. And today, we are doing a deep dive into a really fascinating stack of financial and operational analysis. We're looking at the inner workings of Newgen Software Technologies.
Also known as Newgen.
Right. We're going to unpack how this company acts as the invisible engine for regulated industries globally.
Yeah, and the sources we have today are super detailed. They give us a comprehensive breakdown of Newgen's business model, their competitive advantages, the financial metrics,
Which are wild, by the way.
truly, plus the structural growth trajectories and the risk factors. It's a really robust look at an enterprise software contender that's, operating on a global stage.
It really is.
Mhm.
I mean, to set the tone here, you can kind of think of Newgen Software as the central nervous system of a huge corporation.
I like that analogy. But I do want to ground the conversation a bit too, because this is fundamentally a story about mission-critical digital infrastructure.
Right. Not just some flashy tech trends.
Exactly. It's the heavy lifting.
So before we look at the financials and, the size of the market, we first need to understand exactly what it is that Newgen sells to these colossal organizations. Let's talk about the anatomy of this unseen giant.
Okay, so the core concept here is the Newgen Nuge platform. That's their main thing.
And what is that, practically speaking?
Well, Newgen sells it as a unified, low-code digital transformation platform.
Okay, buzzword heavy.
Very. But if you break it down, it has three core pillars. There's enterprise content management, business process management, and customer communications management.
ECM, BPM, and CCM.
You got
Okay, so let me try to translate that into real-world examples for you guys listening. ECM, enterprise content management. That's basically storing and finding documents, right?
Right.
Like a highly secure digital filing cabinet.
right, like tax returns, stand IDs, stuff like that.
Okay. And then BPM, business process management. That's the automated approvals and case management. So like underwriting that loan we talked about.
Yep, routing the file to the right person at the right time.
And then CCM, the customer communications management, is the system actually generating the regulated customer notices, like the final approval letter or the denial explanation.
Exactly. Now think about the who and the why here. The target customers are large enterprises and government organizations.
Okay.
The end users are compliance teams, lending teams, back office staff, and they operate across 17 different verticals.
17. Wow.
Yeah, but there's a heavy, heavy emphasis on BFSI.
Banking, financial services, and insurance.
Right. Highly regulated environments.
But wait, I have to push back a little here. With so many specialized software tools out there today, why do companies need a unified platform?
What do you mean?
Well, isn't a jack of all trades a master of none? Like, why not buy the absolute best document storage from company A, the best workflow app from company B, and so on?
That's a fair question, and it's the core debate in enterprise software. But the necessity here comes down to orchestration.
Orchestration, okay.
Yeah, in heavily regulated sectors, stitching together different software creates major compliance gaps, and it slows operations way down.
Because the systems don't talk to each other perfectly.
Right. You have data moving between silos.
Yeah.
A single stack for the process, the content, and the communications is critical for auditability.
Ah, so if regulators come knocking, you can show them exactly where the document was, who touched it, and what letter was sent out, all in one system.
Exactly. It's an unbroken chain of custody.
Okay, that makes a lot of sense. So understanding that Newgen provides this really crucial operational infrastructure, it naturally leads to the question of, well, just how big is the pool of potential buyers?
Right. Let's map out the addressable market, the uncapped opportunity, as they call it.
Yeah, and there's a bit of nuance with the total addressable market, right?
Definitely. There isn't actually a single audited TAM figure provided by the company in these sources.
Which is pretty common for these sprawling enterprise platforms.
Yeah. You basically have to view the opportunity as the combined spend on ECM, BPM, CCM, and all the vertical workflow apps globally.
And it really is a global footprint. I mean, this isn't just an India-centric story, right?
Not at all. Newgen is actively expanding its subscription-led growth into the US, the UK, and Australia.
So they are playing in the big leagues. But how much of this market have they actually penetrated versus how much is just, white space?
Well, let's break down the current penetration. On one hand, they do have a substantial installed base. The sources cite 87 major customers that are contributing over a threshold revenue scale.
Okay.
And 56% of their revenue in FY25 is annuity revenue.
Meaning recurring revenue. That's super sticky.
Exactly. But on the other hand, the category itself remains far from saturated.
I sort of think of it like a sprawling, ancient city that's trying to upgrade its plumbing.
Oh, that's a good way to picture it.
Right. Like, the total market isn't about replacing every pipe overnight. That would shut the city down.
Total chaos.
Yeah, it's about these fragmented, continuous upgrades across countless departments and workflows, playing out over a decade or more.
And that ongoing upgrade cycle is driven by enduring structural tailwinds.
Like what?
Well, digital adoption replacing paper, for one, but also the ever-increasing complexity of transactions. A bank today has to manage mobile apps, third-party integrations, cross-border regulations.
It's a lot more complicated than a teller cashing a check.
Right, and all of that requires the formalization of operations. You can't run that kind of complexity on email chains and spreadsheets anymore.
Okay, so if the market is this vast and it's ongoing, it obviously invites fierce competition.
Oh, definitely.
So we need to explore why a bank or a government agency chooses Newgen over, the tech behemoths. Let's dive into their economic moat and the cost of switching.
Yeah, the technology advantage is real. If we dive deeper into the Newgen architecture, there's a specific reason it's hard to beat.
Which is?
It's a true single-stack, cloud-native platform.
Meaning they built it all together from the ground up.
Exactly. It's remarkably hard for competitors to replicate that without extensive integration overhead, because a lot of competitors just buy up smaller companies and tape them together.
Right, the Frankenstein platforms.
Yeah, and because Newgen is native, clients reportedly see 40% faster implementations.
40%. That is a huge savings in consulting fees and, operational downtime.
It's massive. It's very significant for an IT budget.
Right. And then once it's installed, there are these high-friction switching costs.
Very high friction. Newgen software is incredibly sticky.
Because once the software is tied to your compliance rules, your historical records, your daily business approvals,
You can't just rip it out. Replacing it requires retraining everybody, revalidating all your compliance rules, and taking on enormous operational risk.
which explains the retention numbers in the sources. The net retention rate, the NRR, was over 115% in 2025.
Right. Which proves customers aren't just staying.
They're expanding.
Exactly. They're expanding their use of the platform across more departments.
Okay, but there's also a cost of performance edge here.
Right.
We're talking about geographical arbitrage.
Yeah, this is a big part of their traditional moat. Newgen combines India-based delivery economics with local sales and support in the West.
So they can offer a highly competitive total cost of ownership against those Western legacy rivals.
Precisely. They give you enterprise power at a much more efficient price point.
But wait, if they mostly compete on price and faster deployment, what happens when they try to move upmarket to premium enterprise clients?
Now you're hitting on the current challenge.
Because doesn't a value brand struggle to sell premium AI tools? A tier 1 bank might want the most expensive option just for peace of mind.
You've nailed the exact shift they're navigating right now. Newgen is actively transitioning its brand positioning
From what to what?
from a good value automation vendor to an AI-first unified enterprise orchestration platform.
That's a mouthful.
It is, but it means their moat has to rely increasingly on technology depth rather than just being the cost-effective option.
Okay, so a sticky product with an expanding customer base attempting this premium brand shift. It sounds great in theory, but we need to see how that actually translates into rupees and crores on the income statement.
Let's look at the money machine.
Yeah, let's talk revenue, margins, and economics.
So we have to look at the revenue mix. There are 4 distinct revenue streams here.
Okay, what are they?
First, you have subscription and SaaS. That's the growth engine. Then annual support and maintenance. Third is one-time licenses. And finally, services.
Got it. And the financial highlights from the sources for FY24 are pretty robust.
Very. They showed a revenue of 1,244 crore rupees.
Which is up 28% year over year.
Right. And a profit after tax, PG, of 252 crore rupees.
Up 42% year over year. That's a huge jump in profit.
It is, though I should mention the 9M FY26 results show a bit of stabilization, with revenue at 1,122 crore rupees.
So the growth is maybe leveling off a bit recently, but let's go back to that revenue mix because there's a shift happening. The holy grail of enterprise software is recurring revenue.
Absolutely. The annuity revenue.
Right. And management claims that annuity revenue made up 56% of FY25 total revenue.
That's the subscription and the annual support combined. When that crosses 50%, your business model becomes incredibly resilient.
Because you aren't starting every quarter at zero.
Exactly. You have predictable cash flow, and that ties directly into their margin structure and operating leverage.
Okay, unpack the operating leverage for me.
Well, think about the gross margin drivers. In software, you build the code once and you can sell it infinitely.
The marginal cost of a new copy is basically zero.
Right. But you have to balance that against the cost buckets. They have employee costs.
There are a lot of employees.
Yeah. Plus cloud hosting and the enterprise sales teams. But because the software margins are so high, Newgen exhibits strong operating leverage.
Meaning as revenue grows, it outpaces the growth in costs.
Precisely. That's why the profit grew 42%, while revenue only grew 28%.
Okay, but what about that fourth revenue stream? Services. Because I've always thought about services revenue as kind of the cost of admission to a theme park.
What do you mean?
Well, getting people into the park, managing the gates, scanning the tickets, it's labor-intensive and lower margin, right?
Definitely. Services usually drag down software margins.
But it gets the customer inside the gates. And once they're inside, they buy the high-margin, recurring subscription rides year after year.
That's a great analogy. The services are the implementation, the custom coding required to get the platform working in a legacy bank. It's tedious, but you can't sell the high-margin SaaS without doing the heavy lifting first.
Right. So the financials show a healthy, profitable engine today, but investors and analysts are always looking ahead.
Always.
So where will the next phase of growth come from? If they're stabilizing around that mid-single digits recently, they need a spark.
They do. And the most plausible 5 to 10-year growth isn't actually some wild pivot. It's mostly about getting existing customers to buy more modules, deeper penetration.
Selling the workflow tool to the HR department after the lending department already bought it.
Exactly. But the more aggressive growth vector is the AI and premiumization play.
Right, the AI agents.
Yes. They're introducing Gen AI-powered tools, like specific AI for loan monitoring.
But that is a huge execution-dependent bet, isn't it?
It is, because to command those higher prices, they have to prove these premium features deliver measurable ROI.
It can't just be an AI chatbot bolted onto the side.
No, it has to actually save the bank money or prevent real risk.
Okay, what about geographic and ecosystem expansion? Because that's the third vector, right?
Yes. And the sources show some really good numbers there. In the recent FY26 data, revenue bumps in the USA were reported up 19.9%.
Nice.
And APAC was up 22.3%.
So they're successfully moving out of their traditional strongholds.
Yeah, and a big part of that is their strategy of utilizing global system integrators, or GSIs, to sell the product.
Okay, wait. Relying on partners like GSIs sounds great for scaling, but doesn't that mean you lose control of the sales process? And more importantly, the implementation quality?
It does. It's a double-edged sword.
Because if a huge consulting firm botches the Newgen rollout at a major bank, the bank doesn't blame the consultants, they blame Newgen.
You're exactly right. Ecosystem expansion scales your reach super efficiently because these GSIs already have relationships with all the big CIOs.
Right.
But it requires Newgen to ensure their platform is incredibly easy to integrate. If it's too complex, the GSIs will fail, and Newgen will have to send in their own engineers to rescue the project.
Which completely dilutes their margins.
Right. Heavy customization is the enemy of scalable margins.
Okay, so all of these growth vectors, duper penetration, AI premiumization, GSI partnerships, they look fantastic on a slide deck.
They do.
But the real world is messy. So it's time to examine the dark clouds and the structural risks that are threatening this whole trajectory. Let's look at the cracks in the armor.
And the biggest crack is the giants in the room, the competition.
Right. Newgen isn't operating in a vacuum. They're up against literal titans like IBM, Microsoft, and Oracle.
Yeah. And if those competitors launch superior AI-native platforms, especially Microsoft with that OpenAI integration, Newgen's legacy features could face rapid obsolescence.
Because why buy Newgen if Microsoft includes an AI workflow engine for free in your enterprise suite?
Exactly. That's a persistent threat.
What else? What of the regulatory side?
Well, playing in heavily regulated industries means you have to absorb regulatory costs. The sources highlight a 12% rise in legal and compliance expenses.
12%. That's substantial.
It totaled 45 million rupees.
Wow. And they also mentioned a past data breach incident, right?
Yes, back in 2022. That cost them 30 million rupees.
Okay, so I look at regulatory risk in the software industry, kind of like climbing a mountain where the gravity just keeps increasing.
The higher you go, the heavier it gets.
Exactly. The higher you go in banking and government contracts, the heavier that compliance burden gets. You need more lawyers, more security audits, more compliance officers.
It's true. And while Newgen has mitigated these risks pretty well so far through geographic diversification, those buffers are temporary.
If the competitors dramatically accelerate their AI capabilities, or if a new regulation drops globally, it squeezes them.
Right. And you also have to factor in cyclicality and macro exposure.
Because enterprise IT spend is definitely not immune to the broader economy.
Not at all. The sources point to a specific event in Q1 2023. They had a 5% revenue drop.
Which was roughly a 1,500 million rupees dip, right?
Yep. And that is absolute proof that when the economy tightens, large clients defer projects.
They might not cancel the software they already have, but they won't buy the new module.
Exactly. The sales pipeline freezes.
Okay, so navigating these intense competitive pressures, the macro headwinds, the regulatory gravity comes down entirely to the people at the helm and the current operational reality.
Let's talk about execution realities and that market paradox.
Yeah, so first, leadership. This is a founder-led business founded back in 1992.
Which is pretty rare to still have the founders involved this deep in.
Yeah, and the promoter ownership stands very high. The sources say it's roughly 53.5% to 53.8%.
And crucially, there are 0% pledged shares.
Right, so a very clean ownership structure alongside a workforce of 4,043 employees.
A huge team. But this is where we have to unpack a really critical detail from the sources. A major working capital red flag.
Okay, break this down for me.
The sources show high debtors standing at 164 days.
164 days. Okay.
And overall, working capital days have stretched from 123 to 244.
244 days.
Yeah.
That is a massive, an enormous jump. What does that actually mean for the cash conversion?
Well, think about what it means when dealing with large enterprise implementations. You do the work, you deploy the software, you invoice the bank or the government agency,
Right.
and then you wait 164 days to actually get paid.
So they're basically funding these massive government IT projects out of their own pockets for half a year.
Essentially, yes. It puts intense pressure on cash flow. You have to pay those 4,000 employees every 2 weeks, but your clients are taking 6 months to pay you.
That's terrifying from a cash perspective. Which brings us to the stock price paradox, because this is the most striking contradiction in the recent data.
It really is.
Look at the numbers. FY26 revenue grew to 1,574 crore rupees. Subscription revenues surged 36%. They have an EBIT margin sitting around 30.37%.
A 30% operating margin is excellent.
Right. So how does a company grow revenue, maintain 30% operating margins, boast about AI and cloud subscriptions, and still see its stock price fall roughly 59.56% over a one-year period?
It got cut in half.
More than half. What is the market seeing that the income statement isn't showing?
Well, the market is analyzing that disconnect. First, you have the slowed overall top-line growth.
Right, from historical 17 to 19% down to recent mid-single digits.
Right, so the growth story is cooling. Second, you have that worsening working capital intensity we just talked about.
The 244 working capital days.
Exactly. The paper profits are high, but the cash generation is strained. And third, the market is just incredibly unforgiving right now. We're seeing a severe repricing of enterprise software valuations across the board due to macro uncertainty.
So investors are saying, okay, your margins look great, but you're growing slower, your cash is tied up for 6 months, and we're worried about the economy. We're slashing your multiple.
That's exactly it. The market is pricing in the reality of the friction, not just the promise of the AI future.
Wow. Okay, so to summarize this overarching narrative, Newgen is this deeply embedded, highly profitable digital transformation engine.
Very true.
But they are currently navigating a really awkward transition.
Yeah, moving from a high-growth legacy implementer to an AI-first cloud orchestrator is not easy.
No, it's like rebuilding the airplane while you're flying it.
Yeah.
And waiting 6 months for the passengers to pay for their tickets.
Good way to put it.
So to leave you with a larger concept to ponder as we wrap up,
Yeah.
as organizations worldwide are racing to implement artificial intelligence, they're discovering a really hard truth.
Which is?
AI is absolutely useless without perfectly organized data and digitized workflows.
Right. An AI can't read a paper document stuck in a basement.
Exactly.
Yeah.
So the true winners of the AI revolution might not actually be the companies building the flashiest chatbots or the coolest image generators.
Who will it be?
It might be the underlying plumbers. The companies like Newgen, who hold the keys to this structured, compliant data that AI actually requires to function in the real world.
The foundational layer.
Right. So the next time you're at work, take a look at the software your own company uses. Question how much of your daily workflow actually relies on hidden automation engines that you never even think about.
It's probably more than you realize.
Definitely. Well, thank you so much for joining us on this deep dive.